Hello folks, this is Bob Abraham from Spectrum Financial Resources with the February 2016 Educational Economic Update. In this video, we'll talk about some of the economic headlines that influenced markets in the last month and give you some insight into what they could mean for you as an investor. Please stay tuned for required disclosure statements. January was another volatile month for stocks. Investors' sentiment turned negative on more bad news about China, plummeting oil prices. Let's talk about some of the major headlines. A first look at fourth quarter economic growth showed us that the economic hit a soft patch in the final months of 2015. Gross domestic product grew just 0.7%, which is a disappointing drop from the 2.0% we saw in the third quarter. Q4 GDP growth will be revised 2 more times as data comes in, and it's possible that the final result will be more optimistic. However, we're not expecting a ton of improvement. Why did the economy slow down? We can attribute a lot of the drop to lower business spending and weak global demand. However, the data also shows that U.S. consumers aren't spending the extra money they save on fuel. Does the slowdown mean the U.S. is heading for a recession? Probably not. It's not great news, but the economy went into negative territory back in the first quarter of 2014 and bounced back rapidly. In other news, the Federal Reserve met the last week of January and declined to raise interest rates again. That's not a big surprise given the challenging economic and market conditions, but some experts don't think the Fed made the right call. With so much uncertainty in markets, a rate hike could have given investors more confidence in the economy. On the other hand, inflation remains low and economic growth is modest, so the Fed might hold off on further rate increases for months. Earnings season kicked off in January, and the overall picture is one of lower earnings and lower revenues. That's not a surprise because we know that American firms are facing more challenges from slowing global economy, a strong US dollar, and weak commodity prices. But more than 2/3 of the firms that have reported so far have been able to beat their earnings targets, which tells us that managers are doing a good job of managing expectations. On the positive side, a gauge of manufacturing activity blew away expectations and came in at the highest reading since last January. Manufacturing, a backbone of economic activity in many parts of the U.S., seemed frozen after several reports showed that factories struggled with demand. This new data is a refreshing change, and we're hopeful about manufacturing this year. That's it for the February Educational Economic Update. As always, if you have any questions or concerns about what we've discussed here, please give our office a call at the number below. Once again, this is Bob Abraham with Spectrum Financial Resources signing off for the month of February 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 248-643-0033. We'd be happy to talk to you.